Hi, my name is Muneer and I'm from the insurance department from Financial. In our seminar, The Basics of Insurance, we uncover the most important aspects in insurance. This is because different insurance have different purposes. In this seminar, I focus on hospitalization, term insurance, whole life insurance and critical illness insurance. Most clients that I meet tend to over-insure themselves or even get an insurance policy just to support a friend. Little did they know that they are unaware of what they have purchased or what the other insurance coverages are. Now, over-insuring themselves may not necessarily be a bad thing, but it will take a toll on their financial cash flows. Now, we at Fund Supermart believes that investing is one of the key ways to beat inflation. If we spend too much money on insurance, there will not be any money left to invest. Thus, in this seminar, I not only cover the insurance element but also the thought process before purchasing any insurance products. In Fund Supermart, our mission statement is to help investors around the world invest globally and profitably. Thus, insurance plays a very important role in keeping clients focused on track. In our discussion for term and whole life insurance, we believe that both products serve different purposes. We might have heard many people that they are being covered for 1 million for term insurance, but do you know that term insurance covers for death, terminal illness, total permanent disability, and of course, there is an option to add critical illness insurance as a rider. However, do note one thing, it only covers for advanced stage critical illness. One most important thing to take note of for term insurance it has no cash value. Now, those people who have bought more than 1 million term insurance coverage have 4 things. Firstly, they would like to cover themselves for a mortgage loan. Secondly, they are leaving a legacy for their loved ones. Thirdly, they are paying off future children's education fees. And lastly, they are securing the premiums at a younger age. For whole life insurance, it is a product that protects you for life. Life insurance policy tends to be more expensive because term insurance has no cash value. For whole life insurance, it is a product that protects you for life. Life insurance policies tend to be more expensive than a term insurance because whole life insurance has cash value. Whole life insurance tends to have a multiplier effect that multiplies the sum assured between 1 to 5 times until age 65 or 70. Whole life insurance also covers early critical illness, intermediate and advanced stage critical illness. Then, the next important question is early critical illness insurance important? Before we answer to that question, one has to understand what is the benefit for critical illness insurance payout. For this particular payout, it helps in hospitalization costs that is not covered in the hospitalization policy. Now, we do know that different hospitalization insurance from different insurers has different pre and post medical coverage. For example, if you have a post-hospitalization of 90 days, this means that you need to have insurance coverage of medical costs of 270 days if you are required to stay in hospital longer. Early critical illness insurance also helps if you require medical treatments overseas, and most importantly, it helps to replace your lost income. Now, if you were to compare term insurance of $500,000 coverage to a whole life insurance of $500,000 coverage, there will definitely be a huge difference in premiums. Lastly, I want to go through one thought process before buying any insurance policies. Sorry. So there is a graduate, when I graduated, so I graduated like 4 or 5 years ago. Now this is us. Do you agree? This is me. And lastly, what I see over here mostly are this. retirees. Am I right? Retirees, yeah? So how much is enough? How much is enough? If you ask any insurance agent, buying insurance is never enough. Yes, yes, buying insurance is never enough. Now, before you purchase any insurance products out there in the market, you have to identify your needs. Okay? If you lose your job, what will your liabilities be? And if you are no longer around, will your liabilities be passed on to your children? So there are life stages in our lives, okay, that they tend to over-insure themselves. You have to use the right product at a different life stage. So 3 individuals at the same age might require 3 different products. Single, just married, married with kids. Okay? Working adults, without owning a house, no kids, single, carefree, right? He should always be getting a hospital insurance, a whole life insurance with early critical illness coverage. For those house owners have kids, married, right? They should have hospital insurance, not only for themselves but also for their children. Okay, for their children, they can tap into their own MediSave account. They should get a term insurance to cover the cost of the house, the mortgage loan, and the future children's education. If it's just born 1 year old, you are looking at about 300,000 term insurance coverage. And of course, a whole life insurance with early critical illness. For retirees, I would see about 50% retirees down here, yes. Hospital insurance, very important, okay? Term insurance, if you have any mortgage to pay, if you do not have any mortgage loans, do not buy any term insurance. Critical illness insurance, it is good to have, but it's not a must-have, because critical illness insurance above age 50 is going to be very expensive. It's good to have, but it's not a must-to-have. It's not a must-to-have. So how much coverage? These are the questions that you should be looking out for. Child's education. Are you providing any amount to your dependents? It could be your kids or your parents. Or do you have any loans at the moment, like home loan, car loan, or any personal loan? The reason why is because we have to save up for retirement. If you are spending too much money on insurance, there won't be any money left to invest. Am I right? Right? Yes. Okay, so you can build up emergency savings, invest in the markets. I would say a rule of thumb is not to buy overall to buy more than 20% of your annual income on insurance. Question you should be asking yourself is, what if you lose your job due to illness, and what will your liabilities be? If you are no longer around, will these liabilities be passed on to your children? The 5 most important questions that you should be asking yourself before purchasing any insurance policy would be: who is this insurance policy for? What is this insurance policy for? When should I buy this insurance policy? Why should I buy this insurance? And lastly, how much insurance coverage should I get? These questions and answers will bring you one step closer in purchasing that particular insurance products.